Brian's here. Let's review Friday, July 26, 2024's price action for the SPY, SPX, and QQQ. If you're new to this YouTube channel, press the subscribe button down below. The intent behind these recaps is to expose how one trader might dissect the market. Hopefully you learn something and it helps you make better trading decisions in the future. So let's start with the elephant in the room, our gamma exposure level right here, just after following yesterday's rejection right here. This was covered in Thursday's recap video. For the past couple of weeks, I've been able to do a video every single day, recapping every single day. So the information in one video gets carried onto the next one. That is important for day traders to always carry the information from the previous day into the next day. That's why the previous day's open, the previous day's close, the previous day's high, the previous day's low. All of that information is important the next day. Because as a day trader, at the very least, the previous day's information is more than enough majority of the time. You can analyze the previous day and the previous day and the previous day and so forth and so forth and so forth, but at what point do you draw the line? The same thing like when you're day trading, the opening print matters, the high of day matters, the low of day matters, and the current closing price matters. If you're looking for extra context, you review the previous day's levels, and then you can look at the week's level. So what is the weekly low and what is the week's high? And at the very least, if you are aware of those open, high, low closing numbers, you already have enough context for yourself and you have enough important levels to make trading decisions off of. For this week, this was a high negative gamma strike that was marked off at the start of the week. These are the weekly gamma levels that I like to mark off. This is how I approach every single week in the markets. I like to map out my gamma exposure levels and then I leave them on my chart for the whole week. I don't make any adjustments to these primary levels. I like to see exactly at the start of the week what was the gamma profile looking like. I get these gamma levels from Quant Trading app, which we may take a look at later in this video. But for now, these levels marked off at the start of the week so we can be prepared. We had the breakdown of that level on Wednesday. Price sold all the way off to below a strike in which we knew there was low gamma below. So price did not want to stay below this strike for too long. So it ended up bouncing. It came up to this level and we see the nice strong rejection with the type of candle we like to see, a strong, sharp rejection. Price did not sit here for 30 minutes, for 60 minutes, for a couple hours. It was rejected. It is letting us know it is strong. Then price sells all the way off, and now we have the start of today. It ended up gapping up. We will take a look at the smaller time frame regarding setups, potential entries and exits, and how you can actually trade this information. But I just wanted to start off with the very obvious thing in the room, because if anything, without understanding any type of context, and we looked at this and we see that was the only interaction price had with any of these significant gamma strikes, and I asked you, where was there a potential trade for this day? This is the only level that really sticks out as a potential clean trade according to these gamma levels. Rejection here, it was another retest of a level that we saw had rejection the previous day. Moving forward, however, if we were to consider the next time price got up to this level, if it closed above it on a 15-minute time frame or a 30-minute time frame and it was holding above and VWAP was also rising to that level, I would definitely look to take a long trade off of this level with a stop on a close below it. In my opinion, the price action could not be clearer regarding these gamma levels. And that is the fun thing at the end of the week. We get to look back and see how did price interact with the levels for the entire week. I do want to keep this video pretty brief, so we will focus just on Friday. I would encourage you guys to watch every video this week to get a full recap for the 5 trading days of this week. Now let's take a look at the SPY on a smaller time frame. So we'll use our 3-minute time frame, which is our momentum based time frame, to see if we can find some sort of significant areas for entries and exits. What a trader could have been considering as best as we can in real time. And I want to start with the other elephant in the room, the gap up. The gap up over what? The 2-day anchored VWAP. The gap up over the 2-day anchored VWAP after an aggressive selling. We've been in a downtrend. Yes, we had this relief bounce yesterday, but here is a nasty downtrend, and then we get a gap up over the 2-day anchored VWAP. If there's anything you take away for gauging sentiments for the current day, this type of reaction in price is going to shock anyone that was shorting yesterday's power hour sell-off. If they decided to swing that position into the next day and price opens up above the volume weighted average price from the previous day, they are instantly in trouble. It's not a good way to start the day off if you are a bear and you've been shorting all day yesterday. Let's just say you entered a lot of your shorts here yesterday and a lot of your shorts here yesterday. And then you started to scale in up here. You added some more shorts here, added some more shorts here, and then you got really aggressive during the last end of the day sell-off. And the average for your position is maybe 542, maybe it's 541 and a half or anywhere in this area. And then you see price gaps up and now you're break even or you're potentially in the red. It's going to make you a little bit more nervous. And as a day trader, if you have no leftover positions from the previous day and you're just looking at it objectively from the current day, the 2-day anchored VWAP is a good gauge or reference for current sentiments. As a day trader, the net change is pretty important for us. The net change is in relation to yesterday's close. So if the market closed here and the market opens here and you're looking at this right here on any of your trading platforms and it's telling you, hey, the market is up 1.12%, that is the net change. That means if the market closed here and then we close here the next day, that is the net change. It is based on the previous day's close. So if I'm looking for something in relation to the previous day, is the market up or is it down? Just like every other trader in the world, it's based on yesterday's close. So if the market closed here and we open here, it means the market is up for the day. Then what's the next thing we can look at? Is the market above the previous day's anchored VWAP? In this case, yes, it is above the previous day's anchored VWAP. It is above yesterday's close. It is a pretty green day so far. No one knows what's going to happen. It does not mean the market will stay above the 2-day anchored VWAP, but you're building a reference for how you're going to approach the day. This is a good sign. Next, where is the market's trading in relation to the current day's VWAP? That is this light gray level that I have on my chart. Price is holding above the current day's VWAP. Now, you guys know how I feel about taking trades early in the morning. This looks chaotic. Nothing about this, in my opinion, looks clean. If you are some sort of micro scalper, there's obviously a ton of opportunity in here, scalping off of VWAP, taking profit at any significant level. In this case here, the levels that are on my charts are from Quant Trading App. At this point, you guys should have heard me mention this a million times, but if you are new to this channel, all the levels that you see on my chart, aside from the EMA, the standard VWAP, are coming from the Quant Trading App script. So if I turn off all my studies, you see that this is a clean chart. I turn back on my studies, and then you can see where all these levels are coming from on my chart. This dash blue level is the max pain strike for the Friday expiration. So in this case here, Friday's expiration, this is max pain. I get these levels from Quant Trading App, so it's just copy and paste every single day. We press this here. I haven't shown this in the videos of the past couple of weeks, just showcasing this for anyone that's new. An hour before the market is open, this script becomes available. We press copy, we come into our platform right here, we go to edit studies, double click this scroll, and then we paste it in, and then we press OK, and boom, the levels are plotted on our chart. The market opens, it draws these levels on our chart as the market opens. So we have the intraday zone, we have some gamma exposure levels, we have the max pain level, we have these weekly zones. So these bigger levels that stretch across our chart are from the weekly levels. This is prepared from a Sunday evening. As soon as the market opens on a Monday, we have these levels. So then it's just gauging price action and looking for setups and managing our risk. In this case here, you guys can see in terms of the micro scalps, which I don't address that much because I don't think there's a lot of meat on the bone, especially for my style of trading. There is a scalp here from VWAP up to our QTA weekly level. Then we get a rejection back down to VWAP. There's another micro scalp here. There's a ton of trades here, but I like to focus on some of the A+ setups. Where can we find multiple confluences? Where can it be easy for a newer trader to identify? So if we looked at this chart, this is pretty easy to identify, whereas the nuances that it takes to establish what's going on here is a little bit more complicated. But I did want to address this potential for opportunities here. We have this rejection at the Quant Trading App intraday level here, and we had this nasty sell-off right back down to VWAP. This is not a trade in which I took, and it's not a trade that I would take even if I knew this is going to happen. It doesn't really fit my playbook. I don't like the confluences. I wouldn't have much conviction in this trade. Maybe on a smaller time frame it's easier to see, but for me this is not really anything that I think is of great value. What's more significant to me is the fact that we are above the 2-day anchored VWAP and we're seeing the buying pressure here. We are seeing, look at how limited price is sitting at these levels. It's bouncing and rejecting off these levels pretty quickly. I love a double bottom. I'm a patient trader. So I would much rather wait for price to return back to a level. It doesn't always come back, and that's where I look for some sort of a 50% retracement off of a larger move, which we've discussed many times on this channel. Here's our push up. Here's our rejection back down. price has pushed off this level and it is returning to this level, this should pique your interest, especially after such a rapid drop in price and it just halts right here, and then you see some sort of indecisive candle with a long wick or long tail, whatever you decide to call it. This should gauge your interest for the potential to go long. It's still not an A+ trade because it's just based across a level. We're going to layer some confluences on this later in this video when we look at the SPX, when we look at the gamma exposure and so forth. But for now, we're just taking a look at this price action. We're taking a look at the studies that are available to most traders. Next, let's check out the Qs. So if we head over to QQQ and see what this looked like, let's zoom into our smaller time frame here. We have the Qs are on support. They're being held. This is the quant trading app intraday level. The levels are applied to multiple tickers. So any of the tickers that are listed here, these levels will show up on your charts. You don't have to copy and paste for each symbol. It's just copy and paste once at the start of the day and you have it. So we switched over to our Qs. Here's our additional confluence. So if you're thinking about taking the trade on the SPY, you're seeing the SPY is holding the 2-day Anchored VWAP. You're seeing the NASDAQ is at some sort of support. You're seeing that is it at some sort of key retracement level. It is in the golden pocket area here between the 50% retracement and the 61% retracement. So here, market goes up and it pulls back to the 50% retracement. It pulls back and it's holding within this range. You have some sort of confluence right here. It's a good habit to analyze the NASDAQ when you're also taking a look at the SPY. As we look at a cleaner chart on the NASDAQ here, let's see what else we have. We have pressure building up. The same thing on the SPY, which we'll take a look at, but we have pressure building up. You see this right here? Price is not going to want to stay within this type of consolidation for too long. Eventually, it will make some sort of a decision. So in this case here, the market's told us which way it wanted to go once it broke out of this compression area. There's already a pattern building here, and this is something your eyes should just take forward into the next week. What do we think is going to happen with the NASDAQ on Monday? Let's just say it's pretty compressed early in the morning. Will we see some sort of breakout of either direction? This is where technical analysis can become important. It might not help you always get a great trade, but it can tell you when there might be opportunity for a momentum or trending day versus times in which the market might just consolidate. We did not break above or below Thursday's high or low. We're still having an inside day on the NASDAQ, as there is an inside day still on the SPY. So that type of information you take forward now onto Monday. Regarding confluences, we have our futures. We have the same zone. Again, this whole week here, this zone has been marked off. We have this weekly POC up here. Price came into this zone. That's the same time the SPY is here. It's the same time the NASDAQ was also at resistance. We see the SPY hitting the max pain strike, which acts as a key support and resistance level. So confluence, confluence, confluence. If you were looking for an afternoon short trade, it was there. Let's move on and take a look at the SPX, as I think there's something I really want to point out to you guys here that can even help make things simpler or easier for yourself. The levels marked off on my charts are the 0DTE gamma exposure levels. So if we head to the QTA Discord, this right here is a stamp of the gamma exposure 21 minutes after the market opened. So this is not hindsight. This is the information that was generated for us in real time here, and with this timestamp, this is the spot price. If we're just looking at this chart, as I like to do, and say, how can I gauge what are the important levels based on this chart? It should just stand out to you pretty clearly, especially if you've been doing this for a while. I like to start off with what is the biggest red one on our chart and what is the biggest green one on our chart. This is called N1, so that's the highest negative gamma strike. This is P1, this is the highest positive gamma strike. And then I plot those two on my chart and keep it moving. So in this case here, we have 400 and then we have 480. If I think the level is too far away, I won't even bother plotting it on my chart, as I like to keep the chart as clean as possible and only mark the levels in which I think are going to be relevant that are around the current price. If this level was to breach, if 425 broke, obviously I'm aware of 400 to start the day. This is an easy psychological number to be aware of, but the way I would approach this or would be looking at this would be, hey, if the market gets over this little green hump right here and it holds above 450, it can naturally progress through these strikes and hit this high positive gamma strike right here. This is where I would expect it to reach some sort of resistance, and this whole area here. This is where the bulk of the positive gamma starts. And in this area here is massive negative gamma. In between here is pretty messy. It is a battle. It is a mixture between both positive and negative GEX. Price can move pretty freely through here. However, if it reaches here, I would expect it to start meeting some sort of resistance in this whole area here. So for a beginner, or if you're a GEX enthusiast, Mark this on your chart right here and leave a note for yourself. You guys have seen me before. Sometimes I will draw an entire green area around this, as I know this is where there's a bunch of positive gamma. And then the same thing to the downside. Where is there a ton of negative GEX? In this case here, this is all negative, so I'm not going to clutter up the charts. But at the start of the day, we're looking at the gamma exposure within this time frame here. So price at this time is in between two significant gamma strikes, 450 and 440. This is 440 and this is 450. This is the spot price. It is in between these two. If price breaks down below this, I would expect it to be support at 425. So this is our 425. Price did not hold below 440. It was, however, holding above 450. Hold above 450. You guys see that? Based on these two gamma strikes, where was the price holding above, at least on a 15-minute time frame? There's not a single candlestick here in which we closed below 440. Pressure is building to the upside. We can see it here on our charts. We can draw a line. We can see the building pressure. We can see the ascension. We were taking a look at the SPY before. We know where the 2-day anchored VWAP was. We know what the 9 EMA was doing. We also know what the NASDAQ was doing. It was holding support. Is this making sense to you of how we can layer confluences and we can layer these analysis on top of each other? These are the same principles that I'm addressing in almost every video and is the way I approach dissecting the market. The gamma exposure is an important asset to have and to be able to understand on the SPX. A nice clean chart with just some gamma levels on the SPX goes such a long way. Save some of the more nuanced, smaller time frame technicals and indicators on your SPY chart if you want to look for extra confirmation because you feel comfortable using a simple moving average or an exponential moving average, or you like crossovers and all those other things that are really helpful to beginner traders. But if you're just taking a look at price action and try to understand what is happening here, we can see that price is stepping up. We can see that buyers are stepping up. We can see that the market is not going lower and it is refraining to close below a significant strike. It does not mean that it won't just drop and then break below these levels. That's where risk management comes into play, but we never know what's going to happen in the next candle. We're just using the information that we have at our disposal right here in this time frame at this point in time, and we're trying to assess, hey, what's probably going to happen for today? What's some significant levels? The only thing we know is the market is above the 2-day anchored VWAP. It is above VWAP. The NASDAQ is holding support. The NASDAQ is hovering around VWAP. We have a decent amount of positive gamma up here. If price was to go higher, it's probably going to be met with some sort of resistance here. However, if price broke above 490 and then it started closing above 490, this is where you tell yourself, hey, where can it go? Well, 495 looks pretty ugly. We have some negative gamma here. I call this a GEX island if it's just a strike that's in the middle of a bunch of other strikes that doesn't belong. So this is a negative gamma island, I would call this. It happens to be max pain. I would not expect the market to go higher than 495 in this case, but I'm not going to be worried about 495 unless we first get into this area. This is the area and this is the zone from 480 to 490. So from 480 to 490, price heads up. And again, this is information based on the chart from here. Price heads up to here and then it gets rejected and it comes back down. That is extra confluence for shorts if they want to take a trade up here. We started already with the SPY. We had the gamma exposure levels from the start of the week. We know the significance of 547. We saw the significance of it the day before. Now we're adding extra layers. We're adding extra confirmation. We're looking at the markets in additional lenses to build our confidence, to add our confluence, and try to gauge our risk off of what we're looking at. Because it means if you decide to take a short, for whatever reason in this area here, or maybe if it's on price breaks back below 480, if you take a short here, you can set your stop above this zone, because the thought process should be now you have some protection. You're trading on the side of people that also want to see the same thing happen. They have proven themselves up here. Price is now broken down. They proved themselves the day before. Price was rejected from this level and now it's breaking back below this level, so you decide to get short in here with a stop over here. It does not mean it's going to work out, so that's why you want to know where you're going to stop out if you are wrong. At least you know where you're going to lose money if you're wrong. In this case here, the trade works out in the favor of bears. I took a long trade. I was more interested in taking the bounce, and this short trade was not for me the same way it was the day before. The same way, of course, I regret not taking this short here. We recapped and reviewed this on Tuesday. We had plenty of confluences on this day. We even had that 50% retracement that was addressed the following day. I did not notice this on the day of Tuesday. It was addressed in Wednesday's video. There was plenty of reasons to be short here. We covered some of the intraday reasons to be short here on Tuesday, but I ignored that short trade as it's very hard for me usually to be bearish on the SPX and the SPY. I don't care how ugly, how bearish the market is, or how sentiment there is. I will always try to find some sort of a bounce, even if it's just a 10 to 15 point scalp to the upside. I'm conditioned to train that way. Even during the 2022 bear market, I was still taking mostly long trades. I think there was probably 3 short trades that I took on the SPX that entire year, or I should say 3 overnight trades, as I knew the risk was worth it. This is layering context for you guys. This is adding confluences. Now let's pay attention to, I said I took a long trade around here. Now why would a trader consider something like that? Let's head over to the SPY, and we know the levels on our chart. We know the confluences we have. This is that break and retest. Let's clear the gamma levels off the chart now. What do we have here? This is our breakout. This is our retest. Once I saw price coming back to this level, I'm now interested. It has reclaimed the buy zone. Once I saw buyers holding this level, I decided to come in and take the long trade. My plan is a stop below yesterday's low, and I decided to swing it into next week here. So this is the previous day's low. So I'm getting long here. A stop loss is below here. I'm looking above to as a gap fill here. 5,600 is a pretty significant strike on the ES. We also have some significance on the SPX chart. I'm aware of new trends that are forming. I'm aware of new micro trends. I'm aware of what the risk is. For me, it seemed worth it once I saw the buyers showed up here. From an intraday perspective, this was easily a 10 to 15 point scalp on the ES. If you don't trade futures, by the way, a 10-point scalp on the ES with one contract is a $500 return. So buying one ES contract when you see a bounce like this and scaling out or taking profit right here, that's how long it takes sometimes to just make $500 off of these key levels for micro scalpers. On top of all these additional levels and proprietary scripts and all this stuff that's on my chart, we can take a step back and try to look at things from a clear, clean price action perspective also. This massive consolidation zone here early in the morning was pretty messy. I'm just loosely drawing. Actually, if we wanted to just encompass the entire candles here, and I'm going to ignore just this little wick right here, but we can go as high up as that wick if we want to be. Let's just say you have no idea with no, previous experience, and you just say, I want to cover the entire opening range, the first hour of the trading day. We see the significance of this area the day before. We see the significance of this area the day before. We see the significance of this area the day before. All this congestion here, we see price broke out and it has returned, and then I'm seeing some sort of buyers coming in here. I'm seeing how price is wicking off the levels. Obviously this came after I opened the position here with these second wicks, but obviously this made me feel good to see that extra confirmation. If we gap below this level here on Monday, then I won't be happy to start off my week, but I will adjust accordingly. But for the most part, I'm under the assumption that this range will hold. If we were to look on the smaller time frame, and we can see right here, where is the bulk of this congestion? Just make this more tight. Let's hide our studies, and we see this is not where price just popped above it and came right back into the range. Not where price was forming wicks below the range. Just trying to cover where the bulk of the price action is. A volume profile will help you be able to see this easier. Lastly, let's take a look at the Qs. Similar situation. Where is the congestion on this chart? Let's actually go to the 15-minute time frame. Where is the bulk of the activity happening? Right here to here. Right, so ignoring where it just poked below it, just spent maybe like a minute or two outside of this range. This is the bulk of our price action. Price breaks out of it and it holds above the level, holds. I'm clocking that information, then it returns back into this range. I see that buyers are present the first time it came into this area. It ended up rolling over on some backside weakness, but look at the buyers here. Look at the indecisiveness. Look at the strength that's showing here. It's not super strong, but it's showing that there are some sort of buyers here. And it's coming right off of the breakout from here. So this is letting me know between $61 and $62 on the Qs, this is an important area to be aware of. So if we are below this on Monday, then I'm going to tell myself, I guess I was wrong, and the market has other plans, I should probably close out my position and maybe not risk off of the previous day's low. I'm giving it a little bit more room just to help with gauging position size, because if I was to say I'm going to risk off of this level, I might have bought too many contracts because I'm going to give it too tight of a stop loss. But when you go with a wider stop, it means you have to go with a smaller position size because you don't want to open up yourself to too much risk. So it's something that I often like to do. I probably won't wait for price to break all the way below here before I close out the trade, but I'm already aware of where the red flags are. It's a red flag if we even get below here. If we get below this area, then we have another major red flag flashing. It also depends on the velocity and how does it break these levels. That is a little bit more nuanced that you pick up as you've been trading for a while, but to beginner, I wouldn't say to worry so much about all of that. Guys, if you enjoyed this video, like the video, share it if you learned something, subscribe to the YouTube channel. Let me know if you have any questions. Links to the Quant Trading app is also in the description down below, as well as the Quant Trading app Discord. Also, if you're curious on the results for my swing trade, that broken wing butterfly, in which I mentioned I saw a lot of gamma exposure around 425 the previous day, the broken wing butterfly turned out pretty well. We didn't end up closing around 425, but as I said, when I entered the trade, I was expecting there to be an overnight move to the upside, and I didn't want to have any risk to the upside, so the trade wasn't in jeopardy there. The only time the trade was in trouble was right after I opened it. The market ended up dropping down here, but with the gap up overnight, obviously I felt pretty good about it, and then knowing I had the safety of the 425 right here, and we continue to consolidate here. I did a video not too long ago on these broken wing butterflies for swing trades. For those of you that are under PDT, you can use it on the XSP, so it's 1/10 the size. Pretty much if you don't think the market is going to be down big the next day, it's a good little way to bring in some sort of cash flow without any type of upside risk.